A very good afternoon, ladies and gentlemen, friends from the media. Each of you have been invited to join us today to celebrate the unveiling of the 2021 Burgundy Private Hurun India 500. The list curated by Burgundy Private, Axis Bank's private banking business, and Hurun India is a list of the 500 most valuable non-state-owned companies in India, ranked according to their value as defined as market capitalization for listed companies and valuations for non-listed companies. As we begin this press meet, may I request all of you to kindly select the speaker view option on your screens for a better experience if you have logged in from your systems, to kindly stay on mute and avoid screen sharing, and to type in any queries on the chat so that they can be taken during the Q&A session as well. And now, to set the tone for this afternoon's proceedings, may I invite
Mr. Anas Rahman Janay, Managing Director and Chief Researcher, Burgundy
India, to address this gathering and shed some light on the list of the hour. Over to you, sir.
Thank you, Shobhita. Very good afternoon, everyone. Hope all of you are doing well. And just to reintroduce, I'm Anas Rahman Janay, founder and MD Hurun India. Last September, we launched the 10th edition of Hurun India Rich List, and the list clearly showed the fact that India is witnessing the fastest wealth creation era in our history. And a few weeks later, we launched another important list based on philanthropy. Then I mentioned in my remarks there that the most important derivative of wealth creation is philanthropy. However, the cycle of wealth creation and philanthropy will not be complete unless we speak about the value creation stories of Indian private enterprises that are accelerating India's wealth creation odyssey. Thus, today we are going to speak about the nucleus of possibly India's most successful billionaires and philanthropists, which is essentially the most valuable company that they've created. Today, I'm very proud to present you the very first edition of Burgundy Private Hurun India 500, the list of India's most valuable 500 non-state-owned enterprises. And for preparing this list, we at Hurun India are extremely proud to partner with Burgundy Private, which I believe is the fastest growing private banking business in the country. The companies in 2021 Burgundy Private Hurun India 500 are ranked according to their value, defined as market capitalization for listed companies and the valuation of non-listed companies. And we've set a cutoff date to arrive at this list as of 30th of October 2021. But however, for select few companies such as Paytm, for instance, which went IPO after the cutoff date, we've considered the market cap as of listing date. And once again, this list refers to companies headquartered in India only. State-owned companies and subsidiaries of foreign companies are not included. One of the fundamental premise of the list is to make the list based on value. And why value, right? Value is perhaps the best way to measure a company's performance, since value takes into account not just the current performance of a company, but also its future potential. Many of India's most valuable companies had surprisingly low sales. For example, some of the startups like Cred, which had sales of only 100 crores in FY21, was worth about rupees 30,000 crores. Some of the companies, especially from the trading industry, have high sales while their market value is relatively small. So that's why the list is based on value and which we thought was more meaningful. To further elaborate, around 271 companies in the 2021 Burgundy Private Hurun India 500, which is ranked by value again, are not on the 2020 Fortune India 500, which is ranked by sales. The difference came from the Hurun excluding companies like Reliance Capital or Future Retail, which had large sales, but did not generate enough value to take them over the list's cutoff, which is about rupees 5,600 crores. Another reason is that the 2021 Burgundy Private Hurun India 500 does not include state-owned companies like State Bank of India and ONGC and so on. So 51 listed state-owned companies could have achieved this threshold valuation if you were to update a methodology to include public sector companies. But then Burgundy Private Hurun India 500 celebrates private value creation, and hence we have excluded state-owned companies from the list. It is also easy to see why Burgundy Private Hurun India 500 represent the most powerful group of companies in India. With a total value of the valuation of all the companies in the list accumulating to $3 trillion, which is more than India's current GDP. These companies make up the backbone of India's economy. Together, these 500 companies had combined sales of about US dollars 770 billion and have employed 6.9 million staff, which is more than the working population of UAE. Report also shows some insights on economic winners and losers of COVID-19. The 2021 Burgundy Private Hurun India 500, the total value of the list, they saw the value go up by around 68% or a massive rupees 90 lakh crores. And this cumulated to a total of around 228 lakh crores. Half of that value has come from companies based in Maharashtra. And 14 Tata Group companies added about rupees 8.5 lakh crores and accounts nearly 10% value of the 2021 Burgundy Private Hurun India 500. As India's big bull, Mr. Jhunjhunwala said, the House of Tata is indeed blessed by God. We also would like to use this list as a yardstick for state governments. For instance, Mumbai is home to 33% of the 2021 Burgundy Private Hurun India 500, and Maharashtra about 40% of the list. So what makes Mumbai and Maharashtra different? What could other cities and state governments do to attract more of the 2021 Burgundy Private Hurun India 500 to set up their regional headquarters or facilitate the growth of more such companies that could potentially feature in the Burgundy Private Hurun India 500 in the later editions? Other interesting facts include, of course, India's most valuable unlisted company in the 2021 Burgundy Private Hurun India 500 is Serum Institute of India, which is currently leading the global fight against COVID-19. It is equally exciting to notice that India's startups has found a respectable place in 2021 Burgundy Private Hurun India 500. Just under 11% of the list are less than 10 years old, led by Mensa Brands, Apna Credit, and so on. Of these startups, around 53 are unicorns and one is a Hurun Gazelle. The top 10 in the Hurun USA 500 and China 500, led by tech giants is Microsoft, Apple, Tencent, Alibaba, and so on. So what I'm trying to say here is, in the next few years, I would not be surprised if the top 10 in the Burgundy Private Hurun India 500 was led by India's startups and unicorns. But while the valuation of these companies might appear really huge in first glance, it's also worth comparing them against the Hurun Global 500. For instance, Apple's current valuation is about US dollar 2.5 trillion, just under the total valuation of the overall list. Currently, 12 Indian companies make it to the 2021 Hurun Global 500, placing India 9th in the list, led by USA with 243 and China with 47. Again, this is exactly the kind of opportunity that we have in the future. Historically, human civilization has moved forward because of trade, or for today's context, value created through businesses. Currently, India INC is at the right time to take advantage of rising middle-class income levels, urbanization, and internet penetration. It is equally important to celebrate these amazing success stories of value creation that will move India forward, both in terms of overall wealth creation and also philanthropy. And for celebrating this story, I'm once again very delighted to partner with Burgundy Private, Axis Bank's private banking business, to launch the 2021 Burgundy Private Hurun India 500. We're very excited about the potential impact of the 2021 Burgundy Private Hurun India 500, and I look forward to taking your questions post the press conference. Thank you very much.
Thank you, Mr. Anas. This year, Burgundy Private, Axis Bank's private banking business, has partnered with Hurun India in launching the list of the 500 most valuable non-state-owned companies in India. Amitabh Chaudhary is the Managing Director and Chief Executive Officer of Axis Bank. Under his leadership, Axis Bank is undergoing a well-outlined multi-year transformation program, which is expected to catapult the bank to a premier financial institution of the country. May I now invite Mr. Amitabh Chaudhary to address the gathering. Over to you, sir.
Thank you so much, Anas. Thanks a lot for that wonderful introduction. On its second anniversary, Burgundy Private, the private banking arm of Axis Bank, is delighted to partner with Hurun India in celebrating India's 500 most valuable companies. Burgundy Private, as you might be aware, came into being this time 2 years ago and has since built client assets of over rupees 80,000 crores, most of it through the COVID-19 pandemic, managing wealth for over 3,000 families across 27 cities in India. For us, Burgundy Private exemplifies our strategy of one Axis, where we are bringing the products and solutions of Axis Group to all our customers. The Burgundy Private Hurun India 500 list recognizes India's 500 most valuable companies and salutes their leadership and the people who have ably steered their businesses through the ravages of the pandemic, adopting new ways of serving their customers, and finally emerging as winners. As India's leading wealth management franchise, Burgundy Private has witnessed this value creation from close quarters. The total value of the 2021 Burgundy Private Hurun India 500 companies is close to $3 trillion. Anas pointed that out, which is higher than India's GDP for financial year 21. The top line of these 500 companies is equivalent to 27% of India's GDP, and they employ up to 1.5% of the total workforce of the country. What is most heartening is that nearly 10% of these companies are younger than 10 years in age, ably representing India's vibrant tech ecosystem. We believe that India's new economy companies will witness greater representation in this list in the times to come. As the world goes through enormous change, the rules to succeed over the next decade will be significantly different from the last. For companies anywhere in the world, creating long-term shareholder value will require satisfying a range of stakeholders, and it cannot be limited to simply maximizing share price. Challenges such as globalization, climate change, income inequality, and the growing power of technology titans have shaken public confidence, and today's critique includes a call on companies to include a broader set of stakeholders in decision-making beyond just their shareholders. Particularly at this time of reflection, it is critical that managers and board of directors have a clear understanding of what value creation means. You can't create long-term value by ignoring the needs of your customers, suppliers, employees, and the society at large. Investing for sustainable growth should result in stronger economies, higher living standards, and more opportunities for individuals. World has indeed changed. A combination of universal connectivity, unlimited cloud storage, and the power of quantum computing means that everything humans do is being reinvented. As a result, we have come to expect value that is instant, frictionless, intimate, interconnected, and preferably free. Companies will need to constantly evaluate their competitiveness and make way for smarter and more effective game plans and strategies. To succeed, firms must also create great workplaces that attract the best talent and pay attention to broader social issues that customers care about, like climate change and equality. Delivering on this expectation is difficult and can only be systematically accomplished if there is a firm-wide commitment to accomplishing it. Ample evidence shows that when executives consistently make decisions and investments with long-term objectives in mind, their companies generate more shareholder value, create more jobs, and contribute more to economic growth than do peer companies that focus on the short term. A McKinsey study identified 5 behaviors that managers and boards can take to reorient their organizations towards long-term value creation rather than just short-term performance. And let me just go through it very quickly. First is investing sufficient capital and talent in large, risky strategic initiatives such as product innovation, marketing, sales, and talent development to achieve a winning position. Second is constructing a portfolio of strategic initiatives that deliver returns exceeding the cost of capital. Those with higher ROIC achieve higher valuation multiples and produce greater shareholder returns over the long term. Third, it is about dynamically allocating capital and talent to businesses and initiatives that create the most value. Companies must also be willing to move talent and other resources to the highest value initiatives and should do so frequently. Fourth is about generating value not only for shareholders, but also for employees, customers, and other stakeholders. They typically rely on ESG initiatives to address the needs of a range of stakeholders. And finally, resisting the temptation to take actions that boost short-term profits. So these 5, elements are very, very important to drive long-term shareholder value. Lastly, investor scrutiny has also been increasing, and longer-term institutional investors such as pension funds that are concerned with environmental issues such as carbon emissions, water scarcity, and land degradation are connecting value and long-term sustainability. Long-term oriented companies must be attuned to long-term changes that will be demanded by both investors and now increasingly governments, so that they can adjust their strategies over 5, 10, or a 20-year horizon. Until firms cross the Rubicon and embrace this new worldview, they will continue to struggle in today's customer-centric marketplace. Axis Bank has been fortunate to be a partner to many names that find mention in the Burgundy Private Hurun list. Through our integrated One Axis approach, we are well positioned to partner with each of these leading institutions as they pass through this change and transformation and achieve greater milestones in the journey ahead. Thank you so much.
Thank you, Mr. Amitabh. The moment we are all here to witness is now. Join us in launching the 2021 Burgundy Private Hurun India 500. Can we have the video played, please?
This show is a historic list
that
that
represents the most powerful group of companies in India that make up the backbone of the Indian economy. And now, to discuss the 2021 Burgundy Private Hurun India 500 and some key findings therein, may I invite
invite Mr. Amitabh Chaudhary and Mr. Anas Rahman Junaid.
As they do so, a gentle reminder to the audience to kindly select the speaker view option on your screens for a better experience if you have logged in from your systems, and to kindly make note of all your queries for our speakers so that they can be answered at the end of this session. Over to you, gentlemen.
Thank you, Shobhita. Thanks, Amitabh. It's a great speech. Really, a lot to take back on and reflect upon. Really, really great hearing you. Just continuing from the messaging that you said, which is basically about One Axis and so on. Post your joining Axis Bank as CEO, stemming from your vision of One Axis, what I see is the creation of possibly the fastest growing private banking business in the country. This in itself is an outstanding value creation story. As someone who has witnessed many such value creation stories firsthand, and India's economic transformation over decades, and especially one of those leaders who have spearheaded their transformation. What are your thoughts on the debut Burgundy Private Hurun India 500?
So, Anas, let me start by saying that Burgundy Private is actually so delighted to partner with Hurun India in celebrating India's 500 most valuable companies. Both India's public and private markets have seen tremendous flows in the last 2 years. You talked about how some public sector companies have been excluded, but ultimately, one has seen growth on both the sides. As wealth managers to some of the most illustrious families in the country, we have seen this wealth creation from very close quarters. 2 reasons make the debut Burgundy Private Hurun India 500 list a special one. Is that one, it celebrates the able leadership of corporate India, steering these companies through, as you can very easily recognize, some very, very difficult times over the last 18 months or so, post the onset of the pandemic. And 2, for us, it coincides with the 2nd anniversary of our private banking business, most of which was built through 2 years of the pandemic. I mean, it's quite amazing that we launched it November 19, and March 20 onwards, we have been living through this pandemic. While India and the world have gone through some of the toughest times, the debut list is a testimony, in my mind, to the human spirit to fight and come out stronger in times of grave adversity. I also believe that times of great adversity actually allow companies who have the right platform to thrive even more than before. So if you are ready, if you have all the elements in place, actually in a situation where the world is going through a very tough time, some companies can actually increase the distance between them and some of the others even more so. And some remarkable change was seen in the country. The pace of digital adoption in the last 2 years has been unprecedented. The pharmaceutical sector really played a very important role in managing the pandemic. Initially, 2 vaccines came out of India. Now, India is talking about 9 vaccines, some imported, but quite a few of them being developed in the country itself. Capital markets saw greater depth and participation. and young India's entrepreneurial zeal depicted in the 65 unicorns that India has produced in the last 2 years. So while the last 2 years have really tested us, they've also given us much to celebrate and be proud of. And that is why we are celebrating these companies through the 2021 Burgundy Private Hurun India 500 list.
Yeah,
You're not
thanks.
audible.
I was trying to search for the controls. The next question, I think this is quite relevant to what you just said now. The transformation of industries, for instance, right? If you look at the top 10 most valuable companies in, let's say, the US, about 20 years, 15, 20 years back, it's been energy and traditional sectors and so on. Now it's all tech. You take Alphabet or Microsoft, all those guys. Similarly, the case of China too. It was traditional, and now it's Alibaba, Tencent, by all those guys, Meituan and all those guys. And India is possibly at an inflection point. We're still dominated by traditional businesses, but they're also very innovative, I must say, compared to even like Mr. Ambani speaks about blockchain and relevance, despite running traditional businesses for last most of his career, right? So that by look at that, they're very innovative in that sense. But from your perspective, would the top 10 of the list, the top 10 of the Burgundy Private Hurun India 500, would that be different compared to now in 10 years from now? Mostly from sector. I'm not referring to the companies, but mostly from a sector perspective.
Oh, absolutely. I mean, the expectation is that this year, approximately 27 to 28 billion dollars will come into India in this financial year to be invested in the startup ecosystem. It's a very, very large number for India. But let's talk about the future. When I talk to the venture capital players, they are saying that what India represents for them in the next 5 years is potentially attracting a capital. And here are the numbers I've heard: 100 to 200 billion dollars of startup capital coming in every year. Now, why I'm giving such a wide range? Because I've heard those numbers. But even if we were to assume that $100 billion was coming into India just to invest in the startup ecosystem, and that will mean that many more unicorns, the amount of innovation in India, the amount of new models getting created in India across all parts of the value chain, and that too on a global scale, will be humongous. And I'll be extremely surprised if you don't see more and more technology companies and some companies from the other sectors. I mean, every technology company is not just fintech. I mean, they're touching almost every sector of the economy. You will see them come up very, very quickly. I mean, in front of us, while NPCI is not a listed company, but 1 billion users around the country now are using the services to make their life easier. And look at how many models have come up in India, which are relying on UPI as a means of payment to make their life easier on a day-to-day basis. So this has enabled business across sectors. Going further, RBI has come out with a new project which aims to leverage the account aggregator framework to embed lending into online marketplaces and tech platforms. So forget about the innovation in India itself. The government of India is creating so many platforms. And these are, platforms which are scalable, which come at almost for free to you, which allow you to touch, every possible Indian company or customer at a very, very cheap price. So if that government is going to come and give to you, the innovation that can be done on that is pretty incredible. So looking forward to more and more companies from that sphere coming into the Burgundy Private Hurun India list.
And I have to ask you about the resilience of Indian businesses, right? Around 23 companies in Burgundy, 2021 Burgundy Private Hurun India 500 have existed over 100 years, and over 113 companies over 50 years. And most of them family-run businesses. And specifically, you mentioned during your remarks, the Burgundy Private currently manages more than 25 of the top 100 richest families in the country, with an AUM of more than 80,000 crores across 3,000 families. So based on this data and your experience, right, what are your comments on sustained value creation amongst the family business? Even when I asked you the previous question, right, I was specifically mentioning about industry. Reliance was once known for O2C, but now it's more of a tech digital company. So Reliance could still be on the top, but could be from a different industry in next 10 years. So purely from that perspective, the sustained value creation, innovation, the family-run businesses, what are your thoughts for that?
So as far as India is concerned, during most of the 20th century, many of the conglomerates were created under the license quota Raj, before and after independence. in a more competitive, partial deregulated environment of the recent quarter century, some of these organizations have suffered major stress. Some have adjusted, while others have either disappeared or may do so unless they change how they conduct their business. You mentioned Reliance, a great example of how they have continued to innovate and continue to invest in the new businesses very successfully and at scale, and so obviously created a huge amount of value. Stock markets love standalone and single industry focused players, while many conglomerates and listed holding companies trade at a discount. Now, that is also a fact. There is a financial logic to equity investors' preference for standalone and single industry focused firms. And in many cases, we see these standalone companies are pulling ahead of their diversified peers in terms of return on net worth, profitability, and growth, while conglomerates in general are battling with high debt. If you look at even Tata's, for example, one of the things which they have done very successfully over the last couple of years is to actually deleverage and ensure that each of the companies, at least the large companies in the group, have enough capacity to continue to invest through this cycle rather than being somehow burdened with high debt, or they're battling high debt. So if again going back, if you look at the aggregate financial ratios of some conglomerates, which do look respectable, it is because one leading business makes up for all the other underperforming businesses in the group. And I'm again not including some of the top groups, I'm talking about groups in general. Now, despite their problems, I do believe conglomerates have a role to play in the economy, given their access to low-cost internal and external capital that gives them the ability to seed new businesses. Family-owned conglomerates also have the advantage of quick decision-making. They can take decisions faster. They can start new businesses quickly. But I do believe it's a balance which the conglomerates need to find. They should, on one side, undertake portfolio optimization to de-risk themselves, because there is going to be a potential slowdown of the mature businesses. They need to rejig their portfolios by divesting mature and slow-moving businesses and investing in sunrise sectors. I think it has also become very an imperative that the families must invest time in nurturing professional talent to lead their companies, constitute a professional board that upholds the high standards of corporate governance. And the families which have done that in the last quarter of the century are actually standing out in terms of what they've been able to achieve. And the families who have not done that have got left behind. I do believe business families need to create a clear succession plan. They need to select the right person, either from the family or from outside, to lead the business. It should not come automatically because you're part of the family, and because they have to ensure that the shareholder value is getting created rather than getting destroyed because you're making wrong choices around the portfolio of companies, the portfolio of sectors, the leadership, the kind of boards you have, and how you are not embracing some of the changes which are happening in the marketplace as we speak.
So that brings me to the next point on financial inclusion. I'm of the firm believer that India is witnessing one of the fastest wealth creation era in its history, mainly due to financial inclusion and, of course, rising middle class income and all that stuff. But then financial inclusion, basically ability for people to go and make purchases digitally, avail more consumer products and services. That is going to play a huge role. And Access is playing a huge role in financial inclusion. And want to know your perspective of what your role is in terms of financial inclusion, digital transformation from a value creation perspective.
So as I mentioned in answer to one of the previous questions, that I think firstly, we have to acknowledge and accept the fact that government followed by RBI is driving a lot of platform related changes through the country. Started with Aadhaar, what they did with the kind of the JAM stuff, then the Aadhaar based accounts, then they came up with UPI, then they're creating, I talked to you about the account aggregator framework, but then they've created a central KYC and it continues. It's not stopped. So firstly, the government and RBI is creating scalable platforms where every company, every individual over a period of time can use practically for free. And it is very, very important, because creating this platform for an individual company would have been very difficult. Because government is creating it, you can ensure that the participants, the network effect of this platform is fully realized. That's point number one. Point number two, government has also realized that it is very, very important that the benefits of financial inclusion need to go to the people who actually deserve it, which has been a problem in India for the longest period of time. They did that, tried to do that to the Aadhaar accounts or Aadhaar linked accounts, but even there, they're seeing some leakage. So, something which they developed with for COVID where the government was trying to ensure that if a token can be given to an individual to go and get a vaccine done, and automatically only that person can go and get the vaccine. Now they're trying to ensure that specific benefits can go to only specific individuals. And so if I'm giving you money to buy books, the only way you can use that money is to go to a accredited store where you can only buy books. You can't buy anything else. So again, these platforms will allow the financial inclusion to go to the deepest parts of the country in a form and a shape where the leakage is kept to a minimum. Now, when all this happens, it obviously creates a great platform for companies like us also to go and capitalize on it, because end of the day, large part of the country is living in the rural markets. A lot of wealth needs to be created and can be created there. And for example, in case of Axis Bank, we have launched something called Bharat Banking because we want to capitalize on these very platforms where a lot of wealth exists there and a lot of wealth is getting created as we speak. If you look at the number of fintech companies or new business models which are addressing just the semi-urban or the rural part of India, you'll actually be quite amazed in the kind of work they're doing, how they're using technology to connect the people in the value chain, and so on and so forth. So my view is that financial inclusion, while we use that word to indicate as if there is a section of the society which needs to be brought in, I think some of the platforms that have got created will bring them in so quickly that we are underestimating the pace of that change and potentially the benefits that can flow to the companies who are able to address that change.
Yeah. And last question before we open the floor for further questions. The way I look at Axis, the Axis One, from a layman perspective, is it's mainly from taking a child from as a child, and helping them grow and finally help them create wealth, then also manage the wealth, then finally through succession planning, more like a cradle to succession kind of story, right? So it's quite interesting. So you would have seen, you would see companies at various levels of stages, right? Now I have a question which I'm sure you would have been asked many times. It's about startup value creation. Some of these startups have significantly lower revenues, but then very high value creation. What are your take on that, on these valuations and some of the listings that have happened? And just want to know more about you from startup value creation.
So let me give you a slightly longer answer, because then I can hide behind a longer answer. The line of, I think, internet-based businesses looking to go public is growing by the day. Very often these companies, as you pointed out, seek much higher valuations than traditional listed peers in similar sectors, all despite leaner bottom lines. So the premise is, of course, that the internet underpinning of new businesses will bring in network effects and help them scale faster, also will allow them to look at adjacent businesses and create a much bigger and a deeper model than what you actually get to see today. In my mind, startup investing is about reimagining the future. And when people look at similar examples across the world, people who have been able to visualize how the future could look like and were the first ones to invest in some of those companies, obviously they're looking and smiling all the way to the bank. Now, many of these internet companies in India are at the nascent stage, and all of us know are much more scalable than the traditional peers. They do not generate enough cash flow. They are using capital to attract customers to their models or to their website or to their apps or whatever that might be. And obviously, all this makes it very challenging for investors to value their IPOs. My limited view here is that while it is a period of time where the growth is extremely high, cash flows are limited, and today it is all about burning capital to get customers in and hoping that they will stay with you through the journey. At some stage, you cannot have different set of parameters for evaluating internet companies and the normal traditional companies. End of the day, business will be valued on how much cash flow they generate and how that value translates to ultimately profit for shareholders. So we are going through that phase right now, high growth phase, development phase, moving customers away from a traditional, relying on traditional models of business to a new way of, embracing and connecting with the world at large. Very soon, these internet companies will have to demonstrate that they can generate cash flow, they can actually generate profits, else their value will fall. And there are enough examples of companies who have not been able to demonstrate that, where the value has fallen. Also, where you get a very high valuation, it is based on an expectation. And if that expectation is not met, you will also notice that the fall in value is also very, very high. So, it's great. It's attracting capital, it's attracting a lot of new people. It is, and India is now obviously coming to see new models. I'm hoping and I'm quite hopeful that some of these companies will succeed, but some of these companies will have spectacular failures also. And that's part of the risk taking. People are, investing capital in these companies. They know that in some cases they will hit a 6, and in some cases they'll get bowled out quite miserably without scoring anything. And it's fine. That's okay.
Yeah,
it's part of that business model.
Yeah, I totally agree with you. And every startup business plan, you see a path to profitability. So, like you rightly said, it has to merge at some point to traditional valuation expectations. Thank you very much, Amitabh. Those are my questions, and we'll take more questions from our guest here. Over to you, Shobhita. Thank you.
Thank you, gentlemen, for letting us lean in and glean from that insightful conversation. We have quite a few questions, I'm sure, from the friends from our media. And to take us through the Q&A session, may I hand over to Natasha D'Souza. Over to you, Natasha.
Thank you, Shobhita. So now we'll go into the media questions. We'll open the forum for media Q&As. I request the media to raise your hand for any questions that you may have for our panelists. Also, you are free to add your questions in the chat window, and we will have them read out for you. So can I please request the media to raise your hand with a show of hand? We will unmute you and allow you access to our panelists. We have a question for you, Anas.
Yeah, sure.
How favorable is India for foreign companies to expand their footing in the country? And what are your observations pertaining to this from the list?
Okay, thank you. See, India is definitely a great market, not only for Indian business, but also foreign businesses to look at, not only in investing, but also to access potential markets. So I think from a Burgundy Private Hurun India 500 perspective, this list limits to the companies that are based in India, and we've excluded foreign subsidiaries. But from a general trend perspective, I really believe that India is going to be the future in terms of value creation. Just to give you some sort of examples, we have a huge target of hitting a 5 trillion GDP or 10 trillion GDP in the next few years. If that has to happen, that can be substantial only by a growth in billion-dollar companies coming from India. So that should be the cycle. So if that is going to happen, that means so much value creation is going to happen in the private sector. So those are my thoughts. Amitabh, would you have something to add there?
No, I completely agree with you. I think what you stated in terms of what is possible, just want to endorse the view. I would love to invite my colleagues, Satish and Apurva. Apurva heads our Burgundy Private Business. He wants to add anything.
Yeah.
Yeah, thanks. Thanks, Amitabh, and thanks, Anas. No, I couldn't agree more. There are very clear animal spirits visible. I think we are, when we meet a spectrum of industry leaders from a private banking standpoint, I think the unanimous view is that there is a lot happening in the country in terms of, just the people power that India has always demonstrated in terms of the demographics, backed with technology acting as a pivoting moment to take India to the next zone is very clearly playing out. And this is, I think, like we heard Amitabh and Anas speak, it is not just in one industry. I mean, if you even look at the IPO calendars that have happened over the last 6 to 12 months, it is a full, spectrum of industries where we are seeing serious wealth creation. And what is also very visible is, I think wealth creation is also happening from first-time entrepreneurs compared to the previous understanding where it would typically move from one generation to the next generation and people were sticking to just their domain. But I think now we are finding people applying technology in perhaps areas where we wouldn't have imagined, right? It could be in the chemical industry, it could be in automation and so on. I mean, the list is endless. So we are finding a very exciting phase of wealth creation overall from an India standpoint. Thank you.
Okay, Anas, yes.
Sorry, if I may just add to what I think Satish and Amitabh have mentioned. Very clearly, what we've seen is the kind of resilience of companies coming out of the pandemic. And if you look at the list, there has been several members, several companies in that list, which have come out very, very resilient from the throes of the pandemic. And I think that, to my mind, has really been the acid test for a lot of companies. And this resilience, I think, augurs very well for the future, because with this ability to bounce back from a crisis of this magnitude, I think a lot of these companies have demonstrated the fact that there is the capability to take upheavals in their stride. I think this is something which we should all be mindful of. Thank you.
Thank you, panelists. Anas, we've got another question for you. It says, can the spike in the healthcare industry consciously be attributed to the pandemic, or is this a trend that's here to stay?
Thank you. I think two things. I think healthcare and pharma, we included healthcare. If you include healthcare and pharma, it's traditionally been one of the biggest value creating sectors from India. Even when we do our other list and when you do our rich list also, which is basically a subset of the Burgundy Private Hurun India 500. If you look at the overall value created, it's always been one of the biggest contributors of value creation from an Indian perspective. And I really believe that this is going to stay over the next coming years as well. And that's when the list gets more interesting. You would, when you have possibly the next year's list produced out, you will see the growth in the sector in itself. So I really believe that the pharma and healthcare will continue to dominate value creation from an Indian context.
Sure. We have a question from Krishna from Deccan Chronicle. The question states, from Tamil Nadu, apart from automobile, what is the next largest sector flourishing and listed? Anas?
Yeah.
Any
so
insights here?
Yeah, absolutely. So based on the 2021 Burgundy Private Hurun India 500, the best performing sector from Tamil Nadu is financial services. If you look at the growth figures, right, that overall from a value creation standpoint, the percentage increase in value is roughly about 17% for financial services, and automobile comes after that. Then healthcare is number 3. So to answer your question, it's financial services and healthcare. But I would like to also ask either Satish or Apurva, you've been speaking to managing relationships for Burgundy private clients in South India as well. What do you see in terms of some of the growth sectors and from Tamil Nadu in terms of value creation and wealth creation? Satish, Apurva, or Amitabh, you can. Satish, yeah.
Yeah, maybe if I were to just take a stab at that one, I think we just saw a recent listing, for example, of an analytics company. So Anas did mention there is a huge runway we are finding in terms of financial services taking off. A lot of large, offshore businesses are setting shop in Tamil Nadu. Apart from that, we clearly see Tamil Nadu as a very strong manufacturing base. I mean, it's historically had very strong presence in the automobile sector. But I would say expanding not just, or rather not limiting itself purely to the automobile sector, pure play manufacturing, there is a lot more activity that we are seeing. Plus, there are huge sunrise businesses which are in the software as a service space. The SaaS model, I think easily 2 or 3 companies in the recent 12 months are in the multi-billion market cap, which originated from Tamil Nadu. So that's again, IT sector continues to hold its strong sway from a Tamil Nadu standpoint. Thank you.
Sure. We have a question from Mr. Chiranjeevi Chakrabarti. This one's for you, Amitabh sir. The question is there a worry that conglomerates hinder competitive environment by cornering capital that could go to productive new entrepreneurs?
No, I don't feel that. I think there was a time in India when your competitive advantage was if you could get the right license. And then somehow, once you got the license, your focus was to ensure no one else got it. But those times have changed now. Right? The markets are open, capital flows where the money can be made. And it not necessarily does not flow to conglomerates anymore. I mean, I talked about the startup capital coming in India. So if you have the right idea, the right kind of a governance model, you know how to leverage that idea, there is money available for you. If you have a track record, which is good, money is available for you. So yes, conglomerates have the track record. The large conglomerates in India who have done very well have the track record and can raise capital and large amounts of capital. But I don't think the small entrepreneurs need to worry. If they have the right idea, they believe that they can win and they can convince investors to come and invest. 27, $28 billion is unheard of numbers for India. A couple of years back, that was not the case. And by the way, more and more is coming because, we all of us should realize that at least on the technology side, venture capitalists are now a bit scared about investing in China, given some of the things which are going there. So how many markets are left, at least from a technology perspective, to invest? US, Israel, India, China was there, China's gone. From a large scale perspective, I'm not saying that technology companies don't exist in Europe and other parts of the world. But if you really want to put large money at play, India is one of the markets available now. And let's not underestimate the impact of Indian diaspora working in US and the connects that go back and forth between India and US as far as that is concerned. So no, I don't agree that conglomerates can necessarily corner any capital. Enough capital is available in India for the right people. For the right people.
Sure. I hope your question is answered, Chiranjeevi. We have the next question for Anas. Anas, we don't see a lot of representation of tier 3 and tier 4 markets in the list. Do you think we are geographically short-sighted and limited in our approach to economic expansion? What do you think are the challenges inhibiting foray into these markets?
Great question. I don't really have an answer about whether we are foresighted about the expansion of the geography and so on. But one clear thing that I would like to speak from the list perspective, which is the 2021 Burgundy Private Hurun India 500, is to demonstrate the fact that the value creation of some of the most successful companies are concentrated in some of the top cities, right? For example, Mumbai is home to about 167 companies in the list. Bangalore is about 52 and Chennai is about 38. The fundamental message that we want to convey here is that, look, there are these amazing companies who are based in these top tier 1 cities. Now, what should the state governments or regional governments do to possibly attract more regional headquarters for some of these national companies or international companies? Number one. The number two is also what kind of ecosystem needs to be provided to get to make and facilitate more and more valuable companies from respective or new regions. So that is one of the things that we're trying to highlight through the 2021 Burgundy Private Hurun India 500. Ideally, personally, from our perspective, the real impact for the list is going to be when the government or someone, they look at the list and say, look, this is interesting. Now we really need to get more companies coming from our city or country, or possibly invite some of the CEOs who are featured in the 2021 Burgundy Private Hurun India 500 to consider having the regional HQ, creating employments, etc., in their respective cities. So to answer your question, of course, from the list perspective, the headquarters are very skewed towards some of these tier 1 cities, but then there are branch offices, there are subsidiaries and everything spread across the country. And of course, we hope the 2021 Burgundy Private Hurun India 500 will motivate more and more individuals into having more and more governments to encourage or facilitate or come up with amazing policies to facilitate more and more super valuable companies from the respective states. Amitabh, if you would like to add anything there.
No, I think you have answered it very comprehensively. Thank you.
Okay, thanks.
Okay, we have Mr. Ajay who wants to shoot a question at the panelist. Over to you, Mr. Ajay. Can we please unmute him?
Hello sir. This is Ajay Ramanathan from Infamous Media. I have a question for Amitabh sir. So I just wanted to know, do you have any growth projections for Burgundy Private in terms of numbers, or do you have any initiatives planned up?
Well, we don't give, estimates of our numbers anymore in Axis Bank, so I can't do that for Burgundy Private. But if you look at our history and how quickly we have grown, I think we have demonstrated to the market as to what the possibilities are and how well we have executed on this franchise. And since it has done so well, and the fact that some of the independent wealth management franchises are struggling a little bit, it makes sense for us to continue to invest and grow this franchise at the same pace as we've done in the past. So I do hope that under leadership of Ravi, Satish, and Apurva, we'll be able to take this franchise to a different level in the next couple of years. While we are banking with 3,000 families, there are many, many more families out there. Our share in all these families is not, there's still scope to expand. There are a lot of Indians who are becoming richer and richer day by day as Indian economy continues to expand. So the size of the market is huge, and we are very committed to this franchise. Ultimately, let's also not forget that this whole idea behind One Axis, Burgundy Private is feeding into other parts of Axis, and other parts of Axis are feeding into Burgundy Private. So this whole One Axis play, I think, puts us in a unique position to actually add value to the people who have this kind of wealth and bring them solutions which very few players in India can do. And that's why we have been so successful. So we want to just continue to build on that as we move forward. You can expand the history to project for the future. We don't give any projections.
We have a question from Sumit from Dainik Sambad. This one's for you, Anas. What is the response from Kolkata or East and Northeast companies in the last 1 year? Any major impact because of COVID? And we'd also want to hear Mr. Chaudhary's inputs on this.
I will have to specifically refer to the list from a Kolkata perspective. So meanwhile, Amitabh, if you could take the first part, I'll get the data to answer to the specific to the list.
So what is the first part you want me to answer?
Then I think the question is about Kolkata and enterprise in Kolkata.
Well,
and
I mean, end of the day, I know people are asking questions around specific regions around the country. Frankly, I would not like to be caught on deciding which region will grow more, because capital is mobile. People have become very mobile. People are now running businesses which have most of their plants or businesses in some part of the country, but they're sitting in another part of the country. COVID has taught us that where you sit is not important. Where you invested the money is more important. And yes, I think the Eastern region has gone through a period where the investments have been low because of some historical reasons. But now all the states in the eastern part of the country are working very hard to attract capital, and not for the owners to sit there, but actually for investments to happen in those local economies. Wealthy people of Calcutta could be sitting in Mumbai, and so they will get counted by Hurun in Mumbai, and that might not be the right way to look at it, because maybe most of the family is still based in Calcutta. I was in the eastern part of the country very recently, and I can see that across the country, including in the eastern region, people are running businesses which are competing at the global level. Businesses might be small, but in that product, they're competing at the global level, or they are creating businesses which lead in India in terms of what they are selling. And I would expect that to continue to happen across the country. So, when you say east and south, I would be a little bit circumspect, because it doesn't matter where the owners are sitting. You should be more worried about where that capital is getting actually invested.
Correct. So I agree with Amitabh. I'll just add one point from a list perspective. We look at the headquarters as based on the ROC filing, but then as you rightly said, the companies will have, the individuals could be spending money elsewhere. They could be based out of the core city and so on. Specifically from 2021 Burgundy Private Hurun India 500, the three industries that is done well from the list perspective is consumer goods, metals and mining, and construction materials. Consumer goods overall value in the list has grown up by around 51% compared to last year. Metals and mining has gone up by almost 420% compared to last year, and so on. So Kolkata, generally, all the companies and industries listed in the 2021 Burgundy Private Hurun India 500, they've had a good year. We'll share the regional press release to you as well, so you get a much better idea.
Anas, we have another question for you. Employees, a lot of companies have realized that employees are the most valued assets for an organization. Especially our employee-centric rankings are an encouraging illustration. So some of the key observations that you think may set precedents for the rest of the nation?
I think a few things. Of course, number of employees is a good benchmark, but then we should also look at new structures through ESOPs, and wherein some of the employees who are invested in long-term growth of the company gets rewarded. So that is one interesting. We've given the insights in the report as well. But I think more than the employee itself, what I would like to bring the focus on also is where opportunities or platform through which some of these employees and high performers gets to be a part of the company's overall growth ecosystem. One classic example is DMart, wherein the CEO is possibly one of the richest in the country. That's a classic example of a professional managers coming into the list and creating substantial wealth. And I also noted down some point where in the 2021 Burgundy Private Hurun India 500, about 221 companies are run by professional CEOs, despite being owned by family businesses. So that's quite interesting as well. So you would see this proportion increasing as years passes by, and that's something that could be quite exciting. Satish, Apurva, Amitabh, if you want to add anything there.
Well, from my perspective, nothing more to add. I think Anas knows the data inside out. He can quote various cuts of it, left, right, and center. Right person to give this answer. So thank you, Anas.
Thank you. Thank you. Thanks, Josh. I think that's
yes. Anas, also there's a follow-up to that India Inc. is definitely democratizing opportunities, courtesy borderless virtual offices. We've seen representation of women in traditional sectors as well in the current list. So any key standouts for you, any key takeaways pertaining to representation of women in traditional sectors?
I don't really have data pertaining to traditional sectors, but our report do have data on the number of women employees. And we've also given a ranking in terms of in the 2021 Burgundy Private Hurun India 500, who are the top women employers. So that has been given as well. So what I can see from the list right now is the top women employees in the list is TCS, Infosys, Wipro, and so on. But more details are available there. We've also shown a section where in the report, if you can look at the report, we also looked at the number of women board directors of the companies who are part of the 2021 Burgundy Private Hurun India 500. There is, of course, much more work that needs to be done in terms from a board of director perspective, but then there's interesting data there as well. So if you have a doubt, I can show the data to you, but then these are two interesting insights that you could find in the press release.
Sure. Our next question is for Mr. Chaudhary. It's from BD Narayankar from UNI. Do you really back the startups or unicorns who go for IPO without having a great balance sheet in terms of profits? Because the great example before us is Paytm IPO. Their revenues also were not great, which did not enthuse the markets.
Well, Paytm did go through a bit of a turmoil in the market, but then we also have huge number of examples of IPOs of similar kind which did very, very well. So to take one example out and say, oh, because of this, these IPOs are not making sense, I think would be a wrong conclusion to reach. Same thing applies to traditional businesses. A lot of them actually come for an IPO and don't necessarily do well. So I would not term one IPO going through a turmoil. I think the price has recovered a little bit since then. Because of that, we should not do this. As I said, internet models or fintech models or models which are relying on technology and which are new models or startup models, are today going through a phase where they are not producing profits. They're consuming capital to attract customers to come to them and gain a kind of a network impact so that customers get used to using their whatever services they're providing. Once they reach a certain scale, the hope is that the profits will come. And because the incremental cost at that time is very, very low, the profits, if they start coming, will be huge. So, yeah, as I also said, that some of these models will succeed and some of these models will fail. There are investors. And by the way, SEBI is ensuring that all the information is disclosed. There are investors, very large investors, global investors, supposedly very, very smart investors who are putting huge amounts of money in these models from the day they started till pre-IPO and in IPO and post-IPO. So, let's see how this pans out. By the way, India is not unique. This has happened globally. We are slightly late to the party. So good that at least is happening now in India, and young entrepreneurs can actually attract capital of this kind. I believe more of these models come so that more startup capital can come in India, and actually people take entrepreneurship as a profession rather than being scared of it. It will help India. Please understand. I told you, expectation is $100 billion of money coming in. Imagine that kind of capital coming into the country, what it could lead in terms of innovation and ultimately that money being spent in the local economy. It'll be good for the country. So hope more and more IPOs come and they are successful. There will be some who don't do very well, but that's fine.
Yeah, but can I just add on to, sorry, I'm done, sorry.
Go ahead, Anas, I was done.
I just want to add on to what Amitabh said, which is basically, Paytm did not have a great IPO, but then you must understand that Paytm, the role that Paytm and Vijay Shekhar Sharma did in terms of creating or helping the startup ecosystem as a whole is impressive. And I really do believe that he has to be, and the company has to be felicitated for that aspect at least. And it's more and more important. So every startup raising the funds to the tune of what Amitabh just said, it generates the employment, tax opportunity, lot of value created around the company, right? So it's very important that these things are encouraged. And just because an IPO did not do on the listing day, which not really badmouth the startup or the founder. We should give the startup and the founder more time. I'm sure building a company to that scale is not easy. It doesn't happen every day. We should appreciate the fact that the value has been created at some point in state of the company, and they've continued to add value to the people and the employees and the ecosystem as well. So I think more IPOs should come and more startups should go public, and more such daring startups should come in India.
So that was the last set of questions from the media. Over to you, Shobita. That marks the end of the media Q&A round.
Thank you.
Thank you, Natasha.
Thank you to each of our panelists for sharing your insights and helping with all the queries that came our way today. Kindly be informed that both our spokespersons will be available for media bites and interviews post this press meet as well. Thank you, friends, for joining us this afternoon. We truly look forward to your covers on this list that mirrors the 2021 story of the Indian economy. Thank you and have a lovely evening.